Hi everyone, in this video I'm going to walk you through the workbook exercises for Chapter 2. Alright, so we're going to work on AP4B, and then in subsequent videos I'm going to separate each problem into its own video. We'll have AP15B and then AP16B, which has two separate tabs in our Excel spreadsheet. So remember that you can navigate between all the tabs just by clicking through those. And let's get started. Okay, so AP4B has a number of different transactions listed, and we had a problem like this in Chapter 1 where, similarly to that, we're going to indicate whether assets, liabilities, or equity is increased or decreased, by how much, and then we're going to provide an explanation if equity is affected. And we need to make sure that our accounting equation of assets equal liabilities plus, I should say owner's equity here, sorry, let me update that. Compared to Chapter 1, we would say net worth. Okay, so the first transaction is that the owner invested $10,000 into the business. And so here, remember this is a contribution transaction. And so the business's assets will go up 10,000, so that's positive there. And then owner's equity will also go up by 10,000. And we'll put an explanation since owner's equity was invested, and we'll say owner investment. Okay, and 10,000 on this side, 10,000 on this side. Our equation is balanced, and we're doing good. Okay, here we paid $3,300 for 3 months rent. So that will be, just thinking of this logically, and a little foreshadowing, we're going to look at this problem, or look at this transaction again down here on a monthly basis. So if we're paying $3,300 for 3 months rent, then if we take 3,300 divided by 3, that means that each month we're prepaying 3 months rent, and each month must be 1,100 then. See that? Okay. So anyway, but the initial payment that we make, cash is going to go down by 3,300, and then prepaid rent is going to go up by 3,300. So again, this transaction, similar to what we had a few of these in Chapter 1 problem that was similar, where we have one asset, being replaced with another. Essentially, prepaid rent is going up, cash asset going down, but they're both assets, so they're both on this side of the equation. Okay, here we borrowed $5,000 from the bank, so our cash goes up 5,000, and our liabilities go up 5,000. So debt goes up, but cash assets go up as well. This will have to be repaid in the future. Okay, we purchased furniture for $2,500 on account. So our asset goes up, furniture asset. But remember, since we bought it on account, the keyword there, on account, our liability is going to increase by the same amount for $2,500. So we owe the money. We haven't yet paid in cash, but we did get the furniture. So we have the furniture asset there. Okay, now we paid $700 for advertising. So cash will go down, assets will decrease by 700, and owner's equity will decrease by 700. And we paid for advertising expense. Okay, so expenses go up, which means owner's equity goes down, and cash goes down because we paid it and we balance there. Okay, here we provided services and received $2,300 of cash, so cash went up, and this is revenue now. So revenue goes up, owner's equity increases. We could say provided services, and so it's the opposite of expenses. Expenses go up and equity goes down, revenue goes up and equity goes up. Okay, paid $400 for the furniture purchased earlier. So here is the, let's see where we at here. Furniture. We bought $2,500, so we owe $2,500. We're making a $400 payment there on this liability. So now our cash is going down 400, and our liability is decreasing by 400. So now we owe $2,100 after making this payment. Okay, now the owner withdrew $2,500 for personal use, so that's a withdrawal. So It'll decrease cash, and it's essentially just the opposite of a contribution up here. So we had cash go up, equity goes up. When you withdraw the cash, assets go down, equity goes down. So it's just an up and a down based on how much money the owners put in or taken out of the business. Okay, and finally we used up 1 month of rent. So as we calculated previously, each month's rent, because we know it's 3 months and it was $3,300, so dividing $3,300 by 3 showed us that each month is $1,100 of rent expense. So we can, here I'm going to do a little formula just to calculate that. So I'll put equals, I'm going to click into the cell here, and then I'm going to click into this little formula bar and say divided by, put the little division symbol, divided by 3. But let's put divided by -3. So assets are going to go down by 1/3. So 1/3 of the 3,300 is gone now, and now it'll be 2,200. But the effect of that, what the transaction is going to specifically show, is a reduction of the asset for 1,100, and then a reduction in equity of 1,100 to represent the fact that we used up, we recognized rent expense. Oh, and here we got to put explanations in. We're going to say owner withdrawal, and we're going to say that we use prepaid rent, asset, and recognized expense. That doesn't quite fit in there. You can stretch the size of columns there, just as something to keep in mind with Excel. Or you can get it, see your little cursor, how it turns black with the arrows. If you get it on the side of a column like this, you can double left click, and it will automatically size that to perfectly fit what's in the column there. So yeah, okay. So that brings us to the end of the problem here. Hopefully that was helpful, and I will see you all in the next video, and we'll work on AP 15B. All right, thanks everyone.